Good morning, and welcome to episode 152 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, December 13th, 2023. Well, it's here. Today is Federal Open Market Committee Meeting Day, or FOMC Day, the last Federal Open Market Committee meeting for 2023, and the last opportunity to get that promised or hinted at last rate increase, with rates currently sitting at 5.25% to 5.5%. Now, most spectators and investors believe that the rates will remain unchanged today. In fact, there's only about a 1.6% chance that the Fed will hike rates today, according to the Fed's rate hike tool. And the reason for that is simply that it looks like, at the surface, that the Fed hasn't broken the economy yet. So the damage they've done in terms of tightening and raising the interest rates to 5.5% basically hasn't broken anything in their eyes. The CPI, Consumer Price Index, came out yesterday at 3.1%. For the year ending in November. The prior reading was 3.2%, so we show some slight easing. That was the year ending in October. I caution you to understand that we're still 3.1% higher on prices than we were this time last year, but it's showing that the inflation is coming down. The Fed thinks that the work they've done is taking hold, and we've not broken anything. The labor market still continues to look strong. Now, it has having an impact on the prices. We saw gold prices run from $18.20 an ounce up to $21.50 an ounce, starting after Thanksgiving and then moving up over that next week. But then it moved back down on profit taking and people sitting on the sidelines to see what the Fed's going to do. So let's take a look at those prices here today, and then I'll give you a little bit more comment about what I think is going on with the economy. This morning, gold's at $1,983.40 an ounce. That's down 1.9% from last week's $21.90. Silver is down 5.6% this week to $22.80 from $24.16 last week. Platinum is up 1.3% to $928 an ounce. It was $916 last week. And palladium is also up 2% to $990 an ounce from $971 last week, with gold falling much less than silver over the past week. The gold-silver ratio, or the number of ounces of silver it takes to buy 1 ounce of gold, has increased to 87.33 from 83.99, and the dollar index has weakened slightly. It's down to 103.93. It was 104.05 last week. Now, again, the Fed doesn't believe they've broken anything. I disagree wholeheartedly. I think the Fed has already broken the bank balance sheets. We have those unrealized losses in treasuries sitting on those bank ledgers, and that's fine if they hold to maturity and they have no need to raise liquidity in the meantime. But if they have a need to raise liquidity, they're going to have to take severe losses on their treasury portfolio. That's what sunk Silicon Valley Bank and 3 other large banks earlier this year. So I think they've already broken the bank balance sheets, and hopefully it works out, but hope is not a strategy. 2, I really think they're breaking the backs of the middle class. This economy is in a lot of trouble. There's a lot of pain out there. I can see it, I can feel it, I can hear it. And the Fed is misinterpreting this. They're seeing higher consumer spending. They interpret that as the individual households have stronger balance sheets and stronger savings than they anticipated, and they think that's why they're spending more. I disagree. They're spending more because everything costs more than it did last year, and they're still buying the same things they needed last year. It just costs more money. And the way they're going about paying for those things, they can't take money out of their home equity. That would require a refinance that takes you from 3 to 8%. Nobody's going to do that. That tap is cut off. They went to credit cards. Last month we saw $1.3 trillion in individual credit card debt. That's how people are paying for their needs. That's a bad strategy. That is going to give way. We're seeing people liquidating precious metals to raise liquidity to cover their basic needs. This is a weak economy built on a house of straw. Not sand, not rock and granite. We've got some issues. I think the Fed is as wrong about the strong household balance sheets as they were about transitory inflation. We'll pay attention to their comments. I think we're going to hear more of the same, but I think the Fed has got it dead wrong. In the meantime, we want you to go ahead and follow us on YouTube. Like us, send us your comments and questions, subscribe to our social media, our monthly newsletter, and our twice weekly alerts. But in the end, don't ever forget that getting rich starts with keeping what's yours.